Good afternoon, welcome to Market Wrap number 222. Stuart Williamson here at the helm, APW. Now this week we're going to talk about what's going on the war with landlords. Is it all over as usual, as we're always hearing? Or is actually the Labour government perhaps going to do better than we thought? So stay with us to the end and you'll hear about why Labour government potentially is a better bet than the Conservatives for the UK property market. So let's just look at what's going on at the moment. The Telegraph reports that landlords are selling off rental properties. There's been a record sell-off. Rightmove data shows 1 in 5 homes listed for sale in the UK were former rentals. That's pretty grim. And in London it's closer to 103, 1 in 3. All in anticipation of the 30th of October budget, because a lot of people are thinking that the Labour Party is going to come in and absolutely thrash the rental market. Now, the Conservatives, to be fair, over the last 2 years have done the rental market no favour by increasing compliance, increasing the situation for renters, which is no bad thing, and also by increasing tax. So with the Labour government coming in, what worse could they do? That's a question you've got to ask yourself, really. But a lot of people apparently are panicking and saying, let's get out of it. Also, you do have the baby boomers, people like myself, who bought properties as part of their pensions. Now they get into the stage where they don't really want the hassle, they want to get out and they want to simplify their lives, and perhaps selling off is an option. And so they're using this as an excuse to do so. So it might not all be about the budget, but it would appear that a lot of it is about it. There's expected to be a capital gains tax hike from the lovely Rachel Reeves. CGT, again, is going to push people to leave the market, which is not really what tenants want, because the impact will be is going to be fewer rental homes out there. And the Telegraph reports that it could increase rents in London, for example, by between 15 and 20% if a third of all the rental properties disappear, which is pretty damn grim, really. Rightmove warns, unless landlords are encouraged to stay in the market, tenants will face even more pressure as demand for far outstrips supply. And they will, for sure. It'll be a bad situation. The possible implications of what the budget might offer: raising capital gains tax by 10% will actually cost the Treasury $2 billion in the tax years 2027-2028, because people will stop selling them off. Why should they pay the extra capital gains tax? So perhaps that pushes people back into the rental market. That could be a thing. There'll be fewer property sales, so there'll be less stamp duty as well. So market activity will be flattened. There'll be less tax raised, so that'll be bad for the revenue. So going about a heavy-handed increase in CGT is perhaps not the best approach. Then you have housing supply challenges. What's going on there? There's actually been, post-election, a drop in new builds. Okay? The government came up with this idea of building 1.5 million new properties over the next 5 years, Keir Starmer and Rachel Reeves. And I think, as I reported last week or the week before, they've come up with some mad ideas like increasing the Redcar housing supply, County Cleveland, by 300% of its target, whilst cutting London's target by 50%. Where is the rationale in that? It doesn't seem to be much to me. So there's been a drop in new build. On top of that, new dwelling starts fell by 22% and completions dropped by 12%. This, adding to the supply shortage, is worsening the situation for both renters and people trying to get on the housing market. What are the long-term potential economic risks? It stifles investment. Higher CGT could discourage investment, harming long-term economic growth. Experts suggest alternatives like scrapping reliefs on CGT at DEF, which would raise $2.3 billion without affecting the current property transactions. Sounds like a much saner way to look at it from me. So look at what the Telegraph says. The key takeaways are: landlords are selling off properties faster than ever, leading to fewer rental homes and higher rents. Bad for everyone. If CGT increases as expected, the market will shrink further. HMLC warns that the CGT hike could actually reduce revenue by discouraging property sales. So really, the decisions they're looking at there are not good for anyone. So you think, is it all bad to have a Labour government? And this is the whole point. In my mind's eye, I always thought the Conservatives were free market economy is driven, and they're better for us. But in reality, house prices have grown better under Labour than they have under Conservatives in the past. The research is that over the past 50 years, house prices have grown 3% more under a Labour government on each occasion than they did under the Conservatives. And we go back through Harold Wilson, Margaret Thatcher, some bloke I don't recognise, I'm sure he's someone very nice, Cameron, and now Keir Starmer. Okay. Now the key findings are house prices grew more under Labour leadership than Tory over the last 50 years. Average annual house price growth under Labour since 1954 has been per sitting has been 9.45%. Average house price growth under Conservatives has been 6.45% growth. Labour has a higher growth rate despite Labour being in power during the 08 financial crash and the Tories being in power during a stamp duty tax holiday of 2020 that caused a house price boom. Now you remember that very recently, house prices over the last 3-4 years, stamp duty holiday, COVID, have gone through the roof. So what does that tell us? That actually the Labour government and its policies sometimes are better for the economy than the Conservatives. It would appear to be the case. The study that I found is it analysed data from the nationwide house price index since 1954, compared property price trends with political leadership over the same period. Labour governed for 19 of the 50 years analysed, while Conservatives were in power for 31 years of those 50. Since 1954, the average house price increase has gone from, if you can believe this, £1,853 to £281,000. So, despite all the doom and gloom that we're looking at and all this stuff about rentals being sold off, the end is nigh potentially, it would appear that it's not the case. Under Labour, it's actually better. Now, I know you can never, past historic performance is no guide to future performance, and we know that. But the point is that what the Labour government are looking at doesn't necessarily mean that they want the worst for the housing market. It's actually done better, which is quite extraordinary, really, if you think about it. So there's no need to have the doom and gloom. There's no need to feel bad about things. As I say to many clients, they say, is it a good time to buy at the moment? It's never a good time. It's never a bad time. It's all about what suits you and what the market sentiment is doing. And market sentiment at the moment is very positive. You see it, as I reported last week, a lot more properties going onto the market. We're seeing mortgage approvals increasing. We're seeing positivity in the UK. And there are some good places to be buying. If you look for pies, as we call it, population increase, infrastructure improvement, employment growth, those things will lead you to a good buying opportunity. And that's what we look to help clients with. So just to recap, there's a lot of negativity in the housing market. It's going to lead to a rental housing market. It's going to lead to a shortage of rental properties, which for us as buy-to-let investors is actually quite a good thing. And then secondly, you think, well, will the Labour Party give us a hard time? It would appear statistically we've actually done better in the past under Labour than under Conservatives. So it's a buying opportunity now. And okay, I've got skin in the game. I do believe that is the case, but I do believe it is the case. Jump in. It's never a bad time. It's never a good time. It's a case of if you're not in the market, you won't benefit from the growth. And as long as you do it in a sound way, in a good location, you'll be successful. So that's market wrap number 222. Thank you very much. Take care. Look forward to speaking to you again next week. Cheerio.